So we cater to institutional investors like pension funds and sovereign wealth funds. At the same time, we focus very much on individual investors. We're calling for 3 rate cuts in the back half of this year. And it's primarily because of the weakening of the economy. In any given year, we ride the fortunes of the markets up and down. So for us, it's really focusing on what it is that we can control.
It didn't take Yie-Hsin Hung long to realize she had a knack for finance.
I do remember when I was a young girl, I was paying attention to the markets, and I remember a big correction. I came home to my dad and I said, "Did you see what happened?"
She studied engineering in college, but deep down, it was business that inspired her. That passion led her to Harvard Business School, where she immersed herself in studying markets.
So I learned a lot there. It also put me outside my comfort zone because being an engineer, I was really great with a number 2 pencil and a calculator. And here, I really had to speak up and engage in the discussion.
Turns out, it was a neighbor who gave her the final nudge towards Wall Street.
My next door neighbor at HBS was an investment banker. And she was so confident. She knew the capital markets could tear apart a company's balance sheet. So I thought, I would love to do this.
Today, Hung is CEO of State Street Global Advisors, the investment management arm of State Street Corporation. Founded in 1978, the firm has grown into the 4th largest asset manager in the world, with nearly $5 trillion in assets under management. That puts it right behind BlackRock, Vanguard, and Fidelity. Now, State Street is teaming up with Apollo and Bridgewater to bring private credit ETFs to market. And Hung says there's more to come.
We've been focused on democratizing investing for a very long time. We just celebrated the 30th anniversary of the very first US-listed ETF that follows the S&P 500 that came from our company. That basically gave birth to this $10 trillion industry.
State Street Global Advisors is expanding fast, growing in the wealth space and looking to new markets in Europe and the Middle East. And in a market that's always shifting, Hung has some simple advice for investors.
It's important to stay invested, it's important to be diversified, and it's important to think about the long term.
So for those who don't know what State Street Global Advisors is, can you tell us precisely what it does?
Sure. State Street Global Advisors is one of the world's largest asset managers. So we cater to institutional investors like pension funds and sovereign wealth funds. At the same time, we focus very much on individual investors. We've been focused on democratizing investing for a very long time. And if there's 3 distinguishing factors about State Street Global Advisors, one would be a history of innovation. We just celebrated the 30th anniversary of the very first US-listed ETF that follows the S&P 500 that came from our company, and today still remains the most traded and most liquid of ETFs. But that basically gave birth to this $10 trillion industry. State Street Global Advisors is part of State Street. Can you explain what State Street is? Sure. So the relationship between State Street Global Advisors and State Street is sort of threefold. So of course they own 100% of our business and they're a publicly traded company. Secondly, they're a service provider to us, just as they are to many asset managers, asset owners, and wealth managers, where they provide custody, fund accounting, middle office operations, and technology service and support. If I say I have $1 million or $5 million I want to have invested, can I call up State Street Global Advisors, or you're really for large institutional investors? What we end up doing is we work with very large institutions, but we also work with wealth managers and wealth platforms. So typically, clients that would be interested in investing would be working with an advisor and then accessing our capabilities. As we talk, President Trump has imposed, as of yesterday, some new tariffs. If you're a money manager, do you know what to tell people about what the tariffs are going to do on the United States economy and the investment environment, or is it not clear yet? There's a lot to really think through and understand the ultimate ramifications and exactly where do we end up with those tariffs. But if you look at the impact of the tariffs, they were much more significant and broad than I think the market expected. Looks closer to 19% on balance versus 2 and change last year. So effectively, it's a 20% increase on 10% of household goods that are imported into this country. And do you think it's going to lead to a recession? Well, we think that it's going to impact both inflation and the economic growth scenario. So we were coming into yesterday expecting the real economy to grow at 2%. And inflation to be closer to 2.8%. If you just go through the math, it would suggest there's probably 1 to 2 points upward increase on inflation and a similar amount on economic growth. So it could put us in a position where we're teetering.
So the tariffs will likely depress the GDP growth rate and increase inflation. So what's the advantage of tariffs?
From our standpoint, we have a hard time seeing the benefits of tariffs. They do tend to be inflationary in the short term. As you're pointing out, the longer term impact on economies is probably the greater downside.
So let's suppose I hear about State Street Global Advisors and I have $5 million. I don't know what to do with it. I want to invest with you. I call up somebody that can get me connected to State Street Global Advisors. I say I have $5 million and I want to get a rate of return of 10% a year. Is that unrealistic on a sustained basis?
So they're likely working with an advisor, but overall, we look at sort of a basic portfolio, 60-40, let's say, equities, fixed income. Our prospects, since we look forward on the equity side, is probably dampened. We've obviously had 2 very strong years. So we're thinking equities are probably going to deliver 6-7% on a medium-term basis, bonds closer to 4%. So that probably puts you in the mid-5s kind of return scenario. If there's an introduction of some alternatives like private credit, private equity, real estate, it's possible to get that up to mid-6s, but certainly lower than probably what most investors are hoping and expecting.
So last year, I think the S&P 500 was up 24%. So why would I not be better off to just buy an index fund for the S&P 500, pay hardly any fees, and just ride with the market as opposed to trying to beat the market? What is your argument to people about why they should have you manage their money as opposed to go into an index fund?
I would first step back and say the biggest part of our business at State Street Global Advisors is index management and ETFs. So if you think of us largely in the passive arena, so we're very much in favor of providing some of that low-cost options and exposure to the market. But I think in this environment, coming off of the last 2 years, you're absolutely right. If somebody just owned the S&P 500 last year and the year before, they would have done really well up until about February 19th this year. And so the focus, we think, is really around asset allocation. Maybe not trying to find the next best investment opportunity, but really thinking about balancing the risks that are in the portfolio.
So today, as we talk, the Dow is down by about 1,000 points. So if you're managing $5 trillion and some of that is in equities, I assume today when you go home, you're going to have lost a couple $100 billion, something
That's
like that.
probably right.
So does that make you nervous during the day when you realize you're going to lose a couple $100 billion? Maybe it'll come back tomorrow, but you don't know.
Right. Well, I think that's the nature of the asset management business. In any given year, we ride the fortunes of the markets up and down. So for us, it's really focusing on what it is that we can control. And the advice we give to investors is diversify. It's the same is true for our business, where if we can diversify by asset class, geography, and client segment, it puts us in the best position.
So the United States has a recession on average almost every 7 years or so. Are you worried about a potential recession?
In our mind, it's probably worst case scenario that we get to a recession environment. We still tend to believe that a safe landing is the base case scenario, but it will be slower growth.
Are you worried about the fact that the United States has roughly $36 trillion of debt and an annual deficit of roughly $1.8 trillion? Does that bother you in the investment world?
It is certainly something to keep an eye on because it does limit the federal government in terms of its availability of fiscal tools to buffer or adjust for unexpected events that might happen in the future. And obviously, to the extent that interest rates stay high, and if inflation is high, that means that interest rates are likely to be higher for longer, then the budget is going to be increasingly occupied with paying back debt.
Many of the investors, let's say they're from Europe or from Japan or wherever they might be, China, they give you money, but they have their local currency and then it goes into dollars. Do you have many of your investors saying, I'm worried about the dollar's value, or people don't care about that so much?
Well, oftentimes our clients outside the U.S. Are either hedging or they're willing to take the exposure to the dollar. Coming into this year, our belief was that the dollar was somewhat overvalued, maybe 10-15%. So the weakness that we've seen in the dollar is actually a welcome. And of course, makes the U.S. better as an exporter, reduces the deficit. I think with yesterday's news, it's likely to result in a slightly more weakening of the dollar, just given the impact on the overall economy.
So if you're managing $5 trillion, you obviously have some impact on the investment world and know what's going on. Suppose Jay Powell called you up and said, I'm weighing whether I should increase or decrease interest rates or keep them the same. What would you tell him?
Look, our view, we would like to see the Fed start rate cuts in June. And so we're calling for 3 rate cuts in the back half of this year. And it's primarily because of the weakening of the economy. And even if inflation were to go up, I don't think it'll go up as much as the worst case scenario. Both are still lower. And the risk is that the Fed either doesn't have enough data or enough confidence or enough visibility. If they are too restrictive, it could further weaken the economy.
Does the Fed ever call State Street Global Advisors for advice?
15% of the world's trades go through us. So we have a pretty decent visibility into what's happening with capital flows. And we also have a unit that captures a lot of information, real-time information on inflation. My next door neighbor at HBS was an investment banker, and she was so confident. She knew the capital markets. I thought I would love to do this.
So to get to $5 trillion, that takes a lot of time and effort. When did State Street Global Advisors really start?
We started about 45 years ago.
That's a lot of money. How many people manage more money than you?
So we have about 650 investment professionals around the world in 11 different locations.
But in the entire world of money management, how many people really manage more than $5 trillion? I guess 1 or 2?
Yeah, it's just a handful.
So let's talk about how you got into this. Where were you born?
So I was born in Chicago. My father was studying for his PhD at Northwestern. So that's why we were in Chicago. And then we moved to Pittsburgh when I was 3. So that's basically where I grew up.
Okay, and you went to college at?
Northwestern.
And your father told you had to go there because he got his PhD there?
Not necessarily. I was really trying to decide whether I wanted to study engineering like my father. My mother was a nurse, and so medicine was an option too. I felt like Northwestern would have satisfied either one of those paths for me.
All right, so when you got there, did you say, I want to be in the money management world, or what did you say when you went to Northwestern?
No, I was really focused ultimately on becoming an engineer and working as an engineer. After I graduated, and actually even before, I had this conversation with my parents, and they all expected my sisters and I to get advanced degrees. So I was looking at a master's in engineering or an MBA, and I had a lot of choices. And as I was thinking about it, even if I went the engineering route, I wanted to get into business. And so I just decided I'm going to go to business school. Okay. And that's where I got introduced to the world of finance.
So after you graduated from Northwestern, did you go into business for a while before you went to business school?
I didn't.
You went right to Harvard Business School?
I went straight through.
I thought you had to go out for a couple of years before you went to business school at Harvard.
It was different then. I think it was maybe 5 more years that they were bringing people directly through. And if I look at the 20 or 25 of us that were in that kind of situation, we all had some sort of entrepreneurial venture. In my case, I started a pickup and delivery dry cleaning service with a good friend of mine.
So you went through Harvard Business School. Did you think that was a very impressive place?
You know what? It was an amazing experience. I mean, I was obviously young. But the people, how much I learned from them, their experiences, in fact, I mean, in some ways, they were very intimidating. So I learned a lot there. It also put me outside my comfort zone because being an engineer, I was really great with a number 2 pencil and a calculator. And here, I really had to speak up and engage in the discussion. And as I said, it opened my eyes to so many different career routes that I hadn't contemplated before.
So you graduated from Harvard Business School. What did you do right afterwards?
So my next door neighbor at HBS was an investment banker. And she was so confident. She knew the capital markets could tear apart a company's balance sheet. So I thought, I would love to do this. And so I had the great opportunity to go to Wall Street and become a real estate investment banker. So I went to a firm called Dean Witter that later on merged with Morgan Stanley. So I stayed with the combined firm, all told, probably about 20 years. I'd say the first half of my career was real estate investment banking. And then there was this period of time where bricks and mortar weren't all that exciting and everyone was focused on the internet. I spent some time in the intersection between investment banking and technology, and then ultimately moved to the asset management side of the business.
Okay, so you did that for 20 years at Morgan Stanley and almost a lifer there.
Well, it coincided with the great financial crisis. And at that time, I'd had a number of different roles, building out alternatives, doing M&A. And that was a role I had at that time. So I could see capital was becoming really scarce. And so I had an opportunity to move to the largest hedge fund in the world, Bridgewater.
You went to Bridgewater, which is a famously easy place to work, right?
Yes.
And so you're working with Ray Dalio, and
Yes.
How long did you do that?
So I did that about a year. And then I had an opportunity with New York Life. And I was very excited about really getting into building a business.
And what did you do at New York Life?
I was involved in product development, M&A, strategy, building out our international business. And then 5 years in, I was made CEO of New York Life Investment Management.
So why did you pick up at some point and say, I'm moving to Boston?
Well, it's a very good question because I had really built a great team, a great business. My team and I, over our 12 years there, we sort of quadrupled the business. But when I got the call about State Street Global Advisors, it's a firm that I've always had immense respect for. And as I got to understand their capabilities, as I said, in ETF, index, cash, bringing all those building blocks together in solutions, all of those areas are enjoying tailwinds. Great client franchise.
What year was that you joined State Street?
So I joined State Street at the end of 2022.
2022, okay. And so is your job to manage the professionals or to make the investment decisions?
It's more on the business of the investment management business. And it really speaks to what I consider more my strengths in developing a strategy for a company, understanding what our strengths are, and then relative to the opportunities in the marketplace and creating that environment for us to achieve that next level.
So State Street Global Advisors now has how many employees?
About 2,500 people around the world.
So if you're not happy with the investment performance, for whatever reason, do you call up the investment managers and say, why are you doing it this way or not that way? Or how do you invest yourself in what the investment process is leading to?
So, I spent a lot of time with the investment teams, and but at the same time, these are individuals that have been at the firm for a very long time, are managing the $5 trillion in assets that we have. And so I really try to, provide the environment where people just can do their best work and, listen in on what they're thinking about, what adjustments we might be making in our strategic asset allocation as we advise clients.
When you were directly making investment decisions, did you ever make any that looked like they were terrible right away or over a period of time and you said, I got to change that position, or you never made those kind of mistakes?
Well, I never really got into the investment side of the business, so I don't have that. But I do remember when I was a young girl, I was paying attention to the markets, and I remember a big correction. I came home to my dad and I said, did you see what happened? You have to sell everything. And I'm so grateful he didn't listen to the younger me. But it's those sorts of lessons that I carry forward, which is even in today's market, it's important to stay invested, it's important to be diversified, and it's important to think about the long term. We've been on a very deliberate strategic growth agenda, and this is an environment where you really have to focus on balancing your risks.
Today, State Street itself doesn't manage money. You do that at State Street Global Advisors.
Right.
And at State Street Global Advisors, do you do private equity as well as public equities?
We don't. We mostly focus on the liquid side of the market. But, we've been very focused on democratizing investing. We put gold inside an ETF, which actually has turned out pretty well for investors this year. And just this year, we partnered with Apollo and Bridgewater to bring private credit and the all-weather strategy that Bridgewater has to everyday investors through the ETF mechanism. And so that's how we are thinking about that broader landscape.
So you've done an ETF with Apollo, an ETF with Bridgewater, but one of them did much better than the other so far in terms of raising money.
It's very early days, and so we're actually quite pleased with both of them. But the all-weather portfolio, the underlying strategy that Ray built really for his own family office, really thinks about two dimensions, sort of inflation and growth. And it's very apropos to the environment that we're in.
So today, your business is expanding, presumably. So are you planning to get into new areas that you're not in now, or plan to hire any more senior people that would help you manage the business?
So the businesses that we're in enjoy a lot of tailwinds. We've been on a very deliberate strategic growth agenda. And so places that we've been focusing and investing resources are in a lot of markets outside the US, wealth broadly around the world, and in fixed income as an asset class. In terms of talent, we're still hiring. And over the course of my 2 years, I have brought in a number of really talented professionals, such that today my immediate leadership team is more than half comprised of people new to the company or new to their roles.
Let's talk about the career of being an investment professional. Suppose somebody's watching and saying, I'd like to be like the president and CEO of State Street Global Advisors. Is this a career you recommend to men and women?
I think it's a wonderful career for men and women. You're really engaged with the capital markets, all of the topics we've been talking about, working with really smart people. And at the same time, what we're doing is really helping millions of people around the world that have saved, that are really trying to save for their retirement, put their children through college, buy that house. And so that sort of sense of purpose, but also the opportunity to be really, to learn a lot.
Somebody said to you, here's $100,000, I'd like to put it in the market. What would you do with $100,000 today?
I would put it in one of our model portfolios that is really well diversified across asset classes, geographies, and segments. Because I think this is an environment where you really have to focus on balancing your risks.
So today, what is your biggest worry about the investment management world in terms of getting investments that investors like? Are you worried about the economy, the tax situation, the tariffs? What is your biggest worry?
Well, I mean, all of those, we have to pay attention to because we're operating in the markets. But when I really think about the asset management business itself, there is continued pressure on fees. Investors are expecting more from their asset managers, and so we're investing heavily in technology and finding efficiencies across our platform, so we're in a position to continue to pass those cost savings on. I'd say the other thing to think about is just the use of technology and how investors on a go-forward basis are going to be accessing their investment.
So if the President of the United States called you and said, you're a very talented person, we need more women on the Federal Reserve Board, would you be willing to serve your country on the Federal Reserve Board?
In many ways, I feel like today I sort of have the best of both worlds. Being able to really grow a business, but at the same time benefit so many people. And so I never want to say never, but I really do love what I do today.